All right, welcome to Bekenet Trading Journal. Today I'm going to give you today's video is going to be very lengthy, so I just want to record everything in just one video. You understand, everything in one video, so that when you get the video, you'll be able to know everything about what Bekenet Trading Journal, how to use it, how to be profitable with it, what to look out for, what not to do with the application, and how to get going. So it's going to be very lengthy. You understand? I'm going to try as much as possible to break down everything. So this is going to be one off video that you can watch. Once you watch it, you will understand everything about this application, and you'll be able to use it to smash the market back to back. Now, this application is pretty simple. This is not a robot. Okay, this application, it is not a robot. It runs on an Android device. It runs on an Android device, and it has a URL which you can use to browse from the Chrome browser or the desktop or your iPhone and all that. It is not a robot. It does not place trade on your account. It does not place trade on your account, and it does not give you signal. It only has one packages that gives signal, just one, and that signal doesn't come all the time. You understand? This software is designed to enhance what traders, and we have simplified everything about how to make money using this application by using trend direction and so many things that we're going to discuss today. So first thing first, before you can use this application, you need to sign up. Once you sign up, there's a subscription fee. We have the one of the forex portal, which is $20 per month. We have the synthetic, which is $30 per month. We have the crypto, which is for $20 per month. So any of them, you can subscribe and take advantage of what this application can do for you. So it's pretty simple. I repeat again, it is not a robot. It is not a robot. It doesn't place trade in your account. It helps break down the market and gives you details about the direction, the trend direction. It generates key levels. You can use it to set price alert and all that. So I'm going to start from the beginning, how it works, you understand, down to the strategy that you can use to make money from this app. So you have to sit back. It's going to be a long video, like I told you. It's just a one video that is going to cover up everything. So let's dive into it. So I'm going to log in. For instance, you just sign up. I am going to log in. Once I log in, this is the dashboard. This is what you see once you log in into the app. It is supported with Android phone. Please, Android phone. Understand this, Android phone only. That is where you can get a notification from. But you can use the URL to browse and generate everything I'm going to show you here, apart from what notification. Now, for instance, all right, so I'm going to be going through the menus of the software. Now, for you to use this software, for you to get notification, there's the first thing you need to do first for you to get what notification, which is what you must come to this place, the notification menu, to activate it. That is if you are using an Android device. If you're using an Android device and you have access to this menu, that is the only time you come to this place. So what do you do here? You click here. You click this notification, you click activate notification. We've created lots of videos on this, but I'm just going to rush through it and go to the reason why we're here. You understand? So you just click, for you to activate your notification, click on this show notification menu. Once you click it, you say yes. Once you click that yes, once you click the yes, your system will generate a notification and send it to our server. Immediately, our server will store that token on our server. That is what it will use to be sending you what notification. Simple as that. So once you've done that, you just click check notification to know if your device has what generated the token. Now you see something like this is the token I'm talking about. Once you have it, that means that it has connected. Then you come here and click test for device to know actually if your device can actually receive a notification. As you can see, I just received a notification to show that what I can get alert notification of price, of key level, of anything I want to set on it. I'll be able to receive it. Simple and straightforward. So whereby you don't receive any of this, that is when you come to this place and what go back to your come to this place, you click what? Fix notification. That's when you, well, let's say for instance, you have been receiving notification, all of a sudden it stop. What you need to do is pretty simple. You don't need to call anybody. You don't need to shout anywhere. Just go back to your activation menu. Click what? This menu that you're saying, reset notification. Once you click this reset notification, it will delete the token on your device and regenerate a fresh token. The reason why you're deleting it, maybe the token has expired. You just do it simple, straightforward. Once you click reset, it will do that. You come back to this place again, click yes. Once you do that, the next thing you're going to do is click what? Fix notification. This fix notification will help update every of our server that holds what? Your token, and change it to the new one that you have. You can click it like 2 times or 3 times, but once is okay, depending on your network. Once you do that, you click your text device, then you now receive that same message that comes. Once you do that, you are okay. So anytime you're having issue with notification problem, repeat this same process. Reset device, come to this place, accept yes, fix notification, you test. That's all. You understand? You only do it once. Let's say for instance you're not receiving notification. So once you're done with that, you can go back to the main menu. So now the main menu, I'm going to talk about the menu that you can use to generate money. You understand? Now talking about key level. Key level is an advanced way of trading. Before you can use a key level is not for everybody. You understand? Because there is no fixed formula of what you need to see, before you can take a trade. You must have the knowledge of what? Price action, well detailed, candle pattern, candlestick. At least you must have at least 30 candlestick pattern on your head off heart before you can use what? Key level. Key level is not for beginners. You understand? It is not for beginners at all. Key level is not for beginners. It's not something you jump into and start trading. No, you must understand basic resistance and support. There is a lot of schools online that are teaching it. We have online academy that can help bring you up to speed. We'll charge you $100 to bring you up to speed. Or you can go to any school, just tell them you want to learn basic resistance and support, breakout retest, and everything you can do about what? Resistance and support. Or you can go to babypips.com and learn, understand. But if you don't have any of this, please avoid what? Key levels. Avoid key levels and use every of that method that we've simplified for you to trade in the forex industry. Simple as that. So for those who already understand how key level works, how do you do it? You click all this place. You have the monthly, we have the monthly key level, we have the weekly key level, we have the daily key level. All you need to do is just click and generate. The system will generate all this key level for you. Then you click and plot it on your chart. Simple and straightforward. Plot it on your chart. So long you understand how to do it, then you take advantage of when price is reacting to those levels, and you smash the market. It's for professionals. If you are a newbie, go and learn resistance and support. Practice it months and months and months before you come to this place. Please, I am begging you, don't come to this place if you are a newbie. You understand? There is no straight formula that this is what you need to see before you trade key level. Key level is advanced. You have to put in a lot of skills before you can trade key level. So if you are a newbie, please, avoid what key levels. Leave it for the professionals to use, you understand, and learn and grow. So this is how you generate your key levels. You can generate for your weekly. You just copy your pivots, R1, R2, R3. You do that. The same thing with the in daily. You do the same thing. It's as simple as that. You understand? Those of you that understand key level already know what to do. So, but I'm just showing you how you can what generate it and trade alongside with it. So that's that. Then the second menu here is how to set this key level you've generated for you to be getting notification, so that you not be looking straight to your what desktop. You can be busy doing other things while you get your notification on key level. All you need to do is just click here, select all the pairs that you want the system to watch at key levels. So you, when price get to those key levels, it will now notify you. All you need, select, then add. If it's monthly, you add. If it's weekly, you add. If it's daily, you add. Simple and straightforward. Once you've done that, the system will start monitoring it and will be sending you notification if you're using an Android device, and if you've set your what, if you activated your notification. Simple and straightforward. But if you don't have a notification, activate your notification, you're using an iOS, and all that. All right, that's that on how to generate what your key level alert, so that you'll be able to receive notification when price get to those levels. So that is that for that. So you have the view history. So anything you set on your key level, you'll be able to view it on this angle. You just click view. I can view my monthly key level. I'll be able to see everything that the system is watching out for. So I have like 28 pairs which the system is watching this key level for me. Like I said, key level is not for newbie. Key level does not have a specific way that they can tell you to trade key level. No, it has a pattern. You must see different candles pattern, weak rejection, before you can trade key level. So if you don't have the experience on key level, please avoid what key levels. You understand? Please avoid it. It's very important. Avoid it. You understand? If you're not a professional, you don't understand it, avoid it. There are other ways you can make money with this application, which I'm going to teach you on how to do it. But for key levels, leave it for the professionals. You can go and upgrade yourself on what resistance and support before you can use what key levels. You understand? So that is that for that. So this is where you get it. For this, all these menu, you can pause, you can resume, you can delete any of them. You understand? You can pause, resume, and delete them. We've created tons of videos on how to do that, so I'm not going to be repeating myself on that. So the next thing we're going to be talking about is what, same thing with what, reversal level. Now this reversal level is the same thing with key level, but is a temporary what, is a temporary reversal level or resistance and support. So you need to have the knowledge of what, you need to have the knowledge of resistance and support before you can do anything. But how do you generate them? You just click on it. It will show you all the reversal levels on each candles and each time frame. This is 1 hour time frame. This is 1 hour time frame. Once you understand resistance and support, breakout and retest, you can do anything with this. But if you don't, please avoid it. Don't waste your time here. You understand? Because if you don't know how to use it, you end up losing money. So upgrade yourself first before you come to reversal level or key levels. But as much as we have it here, you can use it as your take profit, as your take entry. Beginners, please avoid it. Upgrade yourself first. Upgrade before you can use anything about reversal levels and key level, because I've had a lot of complaints. You want to learn, but we don't teach it here. We only teach you how to use the application. We have other academy that can run that for you. You have to pay to learn, or you go to any public educational center, learn resistance and support the proper way before you can trade any key levels, any reversal levels, anything that rose line on the chart. You'll be able to smash it. But it's not something we do here. We only show you how to generate them, you understand, and take advantage of the market. So this is how you get them. So once you see and generate for daily. You just go, is simple, pretty simple to use, generate for daily and all that. Now you see these levels, I've explained them 1,001 time. You see these ones, these are what? Heavy reversal level that has double heavy reversal level. These ones have, these ones are stronger than this, these are stronger than this. So the more price will test all these level, the stronger they becomes. You understand? So you watch out for them. If you are what, a resistant and support trader, you'll be able to understand it well. So this is how you generate them. Once you see them, you plot it on your chart and take advantage of it. That is that. Then the next thing we're going to be talking about is what, how to set your reversal level alert. Is the same thing. You can just, the same way we set the key level, you can do the same thing too. The same way we set the key level, just select the pairs. So once price get to any of those levels, it will notify you, and what, you take advantage of what, the market. Pretty simple. Then the next thing, all these ones are pretty simple. How to set price alert is easy. We've created a video on that. You can just go and check it out. Automatic trading, we've created a video and check it out. You just go and sniper entry. So the things I'm going to be showing you now, those are the things a newbie and a professional can just go to the app and read, follow the instruction and trade with it. You understand? You just follow the instruction and will trade with it. Why every other of this what, from here upward, is something you are supposed to know as a trader. You understand? It's something you're supposed to know as a trader. Reversal level, key level, you have to have the basic knowledge of resistance and support before you can come to this place. So if not, avoid it totally. Why price alert action is a common sense. It's something you can just analyze the market and what, select price, select the pair, you put the price, you want price to get to these certain levels, and it will notify you. You do that. This is one of the advantage of the application. You send you notification and all that. So every of this is very easy for you to use. You understand? Very easy. These are moving average. If you understand moving average, you can do that. We've created tons of videos on that. Automated trading signal. This one, you don't need to do anything. You just set, and it will be sending you what, notification. If there is any setup, it will give you key. It will give you the what's it called, the it will give you the stop loss. It will give you the stop loss, and it will not give you take profit. It will only give you take profit in numbers, like 40 pips. Then you be the one to calculate it. So you must understand how to trade forex first before you can use this application. You understand? You must understand how to trade forex before you can use this application. It's not a plug and play. You must participate in it. So now, today I'm going to be talking more on what these levels that you're seeing here: trend direction, neutral trend direction, filter of neutral trend direction. These are the things you can actually use to trade the market without you having any experience at all, so long you know how to open your MT4 and MT5. So please take note of this. We've created tons of video of it, but I decided what, to create all the videos, everything, explain it in just one video, so that you'll be able to know what we are talking about. And this video is going to relate to both the synthetic and the forex. They are all together, the synthetic and the forex, the same pattern. So first thing first, I'm going to check my trend direction. I'm going to explain everything about trend direction, from trend direction to set neutral trend alert. From there, we'll enter what, filter neutral trend, how to use it, then our sniper entry, how to use them. So out of all this and this, you can understand one and stick to that pattern and trade alongside with it. Simple and what, straightforward. So we are going to go to the trend direction. Now, this menu here that you're seeing as the trend direction, it is a simple way that help you what, summarize and show you where the market is heading to and where the market is coming from, which is the trend. The same way you plot your trend direction in various time frame. We have it on 4 hours, we have it on 1 hour, we have it on daily. It is very, 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 very simple, so long you can read. All you need to do is just click view. It will give me all the summary of what is happening on this market. It will give me summary of what is happening on this particular market as it is now. It's going to give me summary of everything that is happening. As you can see, you see the green logo here signifies bullish, the red signifies bearish. So once you see this, you know it's a bullish. Once you see this, you know it's a bearish. Now, how do we trade on each of these time frame? How do we trade? What are the key things we need to look out for? It is very simple. We only look out for what? First phase. Now, before I talk about first phase, let me explain. Forex market moves in what? In circle. But you might see it as it's something that goes up like this or something that comes down. No, it moves in circle. We have what? If a trend, this is the price of a market. If a market is moving from the bottom to the top, we call it what? First phase. If it's coming from the top, selling from the top, we call it first phase of a bearish move. First phase of a bearish move. If it's coming from the bottom, we call it first phase of a bullish move. So price always what? This is the first phase of a bearish move. Let me write it that way. This is the first phase of a bearish. Let me use bearish. Bearish. And this is the first phase of a bullish. BU. Let me use that as bullish. So price always move in circles. Once it starts from a first phase of a bullish move, it will get to what? A last phase. Let me say here is the last phase of what? A bullish move. From the last phase of a bullish move, it must enter what? The first phase of a bearish move. From the first phase of a bearish move, it will get to a last phase of a bearish move. From this last phase of a bearish move, it will enter what? The first phase of a bullish move. That is how the circle moves, be it 1 hour, be it 4 hours, be it daily, be it monthly, be it yearly. It moves in circle, but it takes time. From a first phase of a bullish move, we must get to what? A last phase of a bullish move. It doesn't go the other way around. From the last phase of a bullish move, the next thing you should be expecting what is a first phase of what? A bearish move. From the first phase of a bearish move, you will be expecting what? The last phase of a bearish move. From the last phase of a bearish move, you'll be expecting a first phase of the bullish move. From the first phase of a bullish move, the circle continues to a last phase of a bullish move. From the last phase of a bullish move, you get to what? The first phase of a bearish move. From first phase of a bearish move, you get to last phase of a bearish move. Then you will be expecting what? A first phase of a bullish move. Now, if that is established, the only thing we look out for, most of you see my trade on Telegram or Instagram, I always buy from low and I sell from high because I am selling from the first phase. I don't have any business with the last phase. Last phase is always in between the prices, in between the market. We don't have any business whatsoever to do anything with the last phase. You understand? But they get to a point that you can, when you see a turning point, that is where the last phase becomes important. But if you don't see a turning point, we'll get to that very soon. If you didn't see a turning point, avoid anything last phase. Is none of your business. The only thing you should be expecting or be waiting for price to turn from a last phase to a first phase. Then you take advantage of the market. If price has gone far from a first phase, you relax, allow it to finish its cycle. Once it get to any first phase of any trade, be it 1 hour, be it 4 hours, be it daily, then before you enter, is a simple rule. You have to be patient. We have 28 pairs. If one is in its last phase, one should be in its first phase. Different pairs, they have different phase. So I've established this now. First phase of a bullish move will get to a last phase of a bullish move. Last phase of a bullish move must get to a first phase of a bearish move. First phase of a bearish move will get to a last phase of what? A bearish move. From the last phase of a bearish move, we'll get to what? The first phase of a bullish move. So it's like a circle. You understand? Forex moves in circles. But it takes time. You will not see it clearly, but that is how it moves. So this trend direction help us to identify those circles in it. As you can see, gold is in its first phase of what? of what the bullish move. So this gold now will now move from this first phase to last phase of this bullish move. From this last phase, it will now enter a bearish first phase of a bearish move. You will now see this thing will now change to red. You will now see a first phase. So how do we take advantage of this first phase? What you need to look out for is pretty simple. First phase, first candle, 1 to 2 candle, simple. 1 to 2 candle or 3, simple. Numbers of pips should not exceed more than 40 pips. Once you spot it on first candle, numbers of pips should not exceed more than 40 pips. As you can see, I can't enter into this market again because the numbers of candles is more than that, meaning price has gone from this entry point. This is the entry point. It has done over 85 pips already, so I don't have any business with it. We don't buy from the top, we only buy from the low when the candle is just starting, which is 1 to 2 candle. That is why you buy from the low. So anything above 12 candles is high already, so it's high. That is why we don't buy again. We only buy when the price is close to the low. That is why we use our stop loss as the recent low. Our stop loss is always at the recent low of the time frame that you're using. The time frame whenever the time frame you spotted this what last phase from, that is what you use what as your stop loss. Take profits. I personally, I don't use take profit. I work with candles pattern, but you can generate your key levels from daily. Plot the line. Whenever price is getting to those levels, you can exit your trade or use reversal level to exit your trade. For me personally, I don't know how to use what's it called, take profit, so I won't teach you what I don't know how to use. You understand? I don't cage myself, so I work with price action. Whenever price is reacting, I'm seeing the movement is not going well for me, I will just close it. I don't cap myself that I must get 200 pips or I must get 20 pips. Depending on my target, depending on how the market is behaving, that is how I take my profit. So you can incorporate that into your own. If you know how to take profit, you can do that. But I personally, I don't do that. So I will not teach you what I don't do. So you can use the last phase as what your take profit, depending on how you want to do it. But the only way you can enter into the market, let it be first phase. Anything last phase, please avoid it. First phase, 1 to 3 candle maximum. Numbers of pips should not exceed 40 pips. Simple and straightforward. Very simple. First phase, 1 to 3 candles only. This is 4 hours. 1 to 3 candle, you are okay. If it's more than 4 candles, leave it. Then that's where you will talk about sniper entry. If it's more than 4 candle as more than 40 pips, that is when you use sniper entry. Like this now, I can only use sniper entry to enter into this market. I cannot just buy direct, even if it's on first phase. But the numbers of candle is much. Understand this. What you need to look out for: first phase. You understand? First phase, numbers of candles must be 1 to 3. Anything more than this, use the sniper entry to enter into the market. Now, this software is built on what? SNES, what's it called? SNES broker. So let me give you a hint on how you'll be able to track each for you to be checking if the phases have changed. Let's say, for instance, this is what 12 candle. The time is what's the time? Look at my time now. My time is 12 o'clock. So by 1 o'clock, this candle will turn to 3. This is 4 hours time frame. If you're using 1 hour, every 1 hour, this candle will change. But for 4 hours, it changes from 1, 5, 7. Yes, from 1, 5, no, 1, 5, 9. Yeah, I think so. 9, then 1 again, then 5. You understand? Nigerian time. You can use it. So the next time this candle is going to change. So you can be using it to calculate so that you can target when it's in first phase, 1 candle. Always check when the time is 1 o'clock, you come and check. You see that this thing has turned to 13. When it's 5 o'clock again, you come and check. So that you know when the phases are over when you're using 4 hours. For daily, you check it every day so that you can enter in the first phase. Apart from that, you are working on alerts that can notify you when the first phase is working. It's pretty simple. Once we do that, we're still going to create a video on that to notify you when there's a first phase, first candle. You do that. But for now, you have to follow the rules. Just be looking at it when the candle changes. This is 4 hours. It changes from 1 o'clock. By 5 o'clock it will change. By 9 o'clock it will change, just like that. Add 4 hours from 1 o'clock, add 4 hours to it. The next time is going to change. This is a 4 hours candle. The next time is going to change is by 5. The next time is going to change again is by 9. The next time is going to change is by what? By what's it called, by 1 o'clock, just like that, in circles, in circles, in circles. So with that, you'll be able to track it and don't miss out on the first phase one candle. You can track it. And another thing, we don't use this application to trade news. The way I trade is the way I design this application. Whenever there is a news, high impact news, I close my position, be it positive or negative, I close. Then after the news, we can come back and get opportunity and start trading. Now, let me recap how to use the trend direction to trade the forex market. It is very simple. All you need to look for is first phase, numbers of candle 1 to 3. 1 to 3 candle. If you see it on the first candle, very good. You see it second candle, very good. You see third candle, very good. You can enter and put your stop loss at the recent high or the recent low of that time frame. It is not difficult. Locate the recent high of a recent low of a candle in that time frame. If you don't know it, Google, do a research, upgrade yourself and do that. It is very simple. It's the basic thing you're supposed to know before you trade forex. Know the recent high and the recent low. That is where your stop loss is. The reason why we use the recent high on the recent low, because it's very difficult for price coming from a low, moving up, to come and retest again that same low. It's very difficult when it has changed its trend direction. When it has changed its trend direction to a bullish move, it does not move like that. As it's moving, it's going to be moving upward, except there is a news, unexpected news, that will just pull a flash to go and retest that particular low. You understand? We're still going to talk about retracement and all that, but this is how you're going to trade when you see what? A bullish move, first phase, between 1 to 3 candle, take it. Numbers of pips should not exceed 40 pips. You can buy or sell. The same thing with the sell direction. You understand? The same thing with anything last phase. Anything last phase, we don't have, avoid last phase. We don't have business with last phase. You don't have anything to do with last phase. We don't have anything to do with last phase. The last phase is here so that you know the phases that the trend has gotten to. You understand? This is first phase. Numbers of pips is gone. If you spotted it when it was 1, you should have been in 200 pips by now, which I know we smashed very well last week on Friday. So that is how it works. You understand? There's no film trick. If you can spot it when the candle is 1, when the candle is 1 or 2, you ride with the trend, you move with the trend. I trade with the trend. We don't trade against the trend. You understand? That is why you see my trade. I hardly hit stop loss. You understand? And some people will say it's fake, but you don't understand. Some of them, they don't understand how this forex industry works. We ride with the trend. You hardly see me hit stop loss. If I hit stop loss, that means I was carried away. I did not take my profit before I was supposed to take it. Except there is a news I did not know before I hit a stop loss, because my stop loss is always at the recent low of it. You can watch all my trade, you see it. So that is what you're supposed to be doing, because that's the reason why we build this application, for you to be profitable. You understand? By using the trend direction for you what? To be profitable. You ride with the trend. This is just 5 candles. 5 candles has generated over 142 pips. Very cool. You understand? That is how it was. So if you spot it, first phase, 1 candle, 1 to 3 candle, you'll be able to get something from this market. That is how all of them is, in 4 hours and 1 hour, in daily. You understand? So that is how it is. That is how it is. Now, coming to that, now this is where we'll talk about, like I told you, you don't have anything to do with last phase, except you see a turning point. Now, this turning point is a turning point, does not come out all the time. Listen now, listen. I've given you the first way of trading with the trend. That is your first strategy you are using to look for the first phase of any pairs, any first phase of any pair. Let me see. First phase of any pair, that is your first strategy. First phase of any pair, look at it, write it down, or go back to the video and watch. First phase, bullish move, I'm going to buy if the candle is between 1 to 2 to 3. I mean, if I spot it in one candle, I buy immediately, put my stop loss at the low. Same thing with the bearish move. If I see this thing green, red, which is bearish move, it's telling me bearish move. Immediately is one candle or 2 or 3. I sell, put my stop loss at the high. Anything this last phase, sorry, anything last phase, we don't sell, we don't buy on last phase, except we spot a turning point, like what I just saw here. Except we saw a turning point here. This turning point simply means that this is the last phase of this bullish move. Look at it, last phase of this bullish move. And I told you that before we started talking about it. From a last phase of a bullish move, we'll get toward a first phase of a bearish move. Last phase of a bullish move to a first phase of a bearish move. Now, without this turning point, we don't know when it's going to turn to a first phase of a bullish move. But immediately you see this turning point, that means it will not take more than 20 to 30 pips before it will turn to a bearish move. First phase, this candle will not turn one, this thing will not turn bearish, here will not turn red. That is why we enter immediately. Whenever you see turning point, it's telling you that the numbers of pips to go is not more than 20 pips. You can just hop in. It's ready to turn the phase. But if you don't see it on this, avoid it. If you do not see this turning point on any of the last phase, don't do anything. Allow it to turn by itself to one and bearish move. But immediately you see it, even if you're seeing bullish move here, is a sign already that it is definitely going to turn. No matter what it takes, it's going to turn. So you can take advantage of it and start riding, start selling immediately. Do you understand? That is what turning point is all about. It's pretty simple. You can only see turning point in the last phase. If you don't see turning point in the last phase, please avoid it. Like this one, there's no turning point here, so I don't have business with it. I'll generally wait for New Zealand JPY to turn to one candle bearish move, because after a last phase, we must see a first phase. Now, this is the last phase, so I will be expecting a first phase of a sell, which is a bearish move here, until it turns before I can do anything. Until this one turns before I can do anything. But immediately you see turning points on the last phase, you don't need to wait for the candle to turn, because in less than 20 pips, 30 pips, is going to turn. So you can ride with it immediately, because you're seeing a last phase. Simple and straightforward. So I've covered two now. Entering the market with a normal trend direction. Secondly, entering with a turning point. Once you see this turning point, you see, as I'm emphasizing on it, once you see turning point, you ignore everything. You ignore everything and enter into the market. Now, this is a turning point. It's showing you red, meaning that you're going to enter a sell, because this is the last phase of a bullish move. From a last phase of a bullish move, you will get a first phase of a bearish move. That's why it's showing you red. It's about to turn to a bearish move. So you sell immediately, put your stop loss at the recent high. You ride the market. Simple and straightforward. Now let me see if I can see a turning point on a bullish move. Let me see for 1 hour. As you can see, GBP has a turning point for 1 hour. The same thing. Last phase, turning point. You can start selling once you see it. GBP shift to sell. The same thing, turning point. This one, turning point. So we have a lot of turning point. Now you can see DSY now. DSY have a turning point on the last phase. This is 1 hour time frame. Turning point on the last phase of a bearish move, meaning that this price has gotten to the last phase of its bearish move. So we're going to be expecting a bullish move on this. That is why you're seeing the turning point here. So you can start buying immediately and put your stop loss at the recent low, because definitely this is going to turn to one. This is going to turn to bullish instantly. So that is how it is. So you've gotten two strategy on how what to use this software to trade without you doing anything. It's just for you to spot them and trade. Let me recap again. You only do any something with last phase when you see a turning point. Apart from that, you focus on what first phase. First phase, numbers of candle must be 1 to 3. 1 to 3. Numbers of pips must be between 1 to 40 pips. Anything more than that, that is when you go to a sniper entry to take a trade on that. Simple and straightforward. So this now cover up. Look at the daily. Let's see if we see there are turning points here on daily. Turning points, the same thing. Turning points, turning points, turning points, turning point. DSY to turning point on daily. This is going to be huge. DSY turning point on daily. So that is how you take advantage of what this software without you doing any calculation or stressing yourself. When looking at it, you've known what you want. This is the simplest way to trade the market, and you will excel and you ride with the trend. This is all about trend trading. You understand? You use the trend direction, first phase, turning point when it is the last phase. You understand? So when this is red now, do you mean that you're going to take a bearish move? This is a red bearish move. This is green, a bullish move, opposite of where it's coming from, because this is the last phase of what? A bearish move. So this last phase must turn to a first phase. This last phase will turn, last phase of a bullish move will turn to first phase of a bearish move. Simple and straightforward. So this is clear. This is very clear. This is very clear. So the next thing now I'm going to show you is what a neutral trend is all about. A neutral trend is all about. Let's go to a neutral trend. Neutral trend is another way you can see enter into the market irrespective of the numbers of candles or numbers of pips it has acquired. It's called simple what? Retracement. When price is entering a retracement, it shows neutral. You understand? So let me explain to you how it is. So you've gotten two strategies on how you can milk the market easily. Two strategy. One is enough, but you have two. Now I'm going to show you the third one, which is the neutral trend. It is very, very simple. You don't need to stress yourself about anything. So all you need to do, the same thing with the synthetic, the same pattern. We understand. As I'm training this, you can apply it to the synthetic. They have the same menu. So, but I'm using the forex to do that. So I'm going to click on what? Filter only neutral trend. So what I want the system to do now is to show me only the pairs that are retracing. That is a neutral trend. Show me only the pairs that are retracing, so that once it comes out of that retracement, immediately I'll start buying or selling. So these are the things you look out for. Let's click and look for any of the pair that are retracing. Then I'll start monitoring it. You understand? The same pattern, we have it on 4 hours. We have it on 4 hours. We have it on daily, 1 hour. We have it on daily. So what this place does is that it only filter out only the pairs that are retracing. Be it a bullish move, it's retracing. Be it a bearish move, it's retracing. So once it's out of that neutral trend, it will head to the proper direction. That is what going to. So let's click and see if we see any of this. As you can see, there are a lot of what retracement going on, but on the trend direction you will not see it as a retracement. It will just show you bullish move or bearish move, blah blah blah. But here we'll give you details so that you not get yourself caught in the middle of what any of the trend there. You understand? You can only see what a neutral trend or a retracement when the price has gone far, not when it is in its first phase. That's why I always tell you, look for candles first phase 1 to number 3 candle. With that, you hardly see retracement on this, but not when the price has gotten to 15 candles, 10 candles and all that, you start seeing retracement. Now we only take neutral trend. Not only the system only display first phase retracement. As you can see, everything here what is in first phase. Is in what? First phase. Everything we see here is in what? First phase. Everything we are seeing here what is in first phase. Now let me explain it. Now this retracement has levels. We have what? The level 3 which is a heavy retracement. We have the level 2 hash star. We have the just level 2. Now let's start with level 3. It's very simple. Don't let it confuse you. But this is just giving you details of how the retracement is going to be heavy. You understand? But the most important thing is for you to check if this Euro USD leave this retracement. Once it disappears out of this place, you will now see it what on the trend direction as what a bullish move. Don't allow what these levels to confuse you. Our purpose here what is to look for a retracement pair. Immediately the retracement is over, you will no longer see it here. It will now go toward the trend direction. Then you can take advantage of it. Simple as that, and start buying or selling. But this information here give you a detailed information on how deep this retracement will be. Like this is heavy retracement. That means price is already in a bullish move, but it's coming down again to come and break a certain low. Now if this price break a certain low, this first phase now will now turn again to a last phase of a bearish move. It will not turn back again to where it's coming from, a last phase of a bearish move. Then that last phase will still come back again to a first phase, but it's showing a retracement. But if you refuse to turn to last phase of it, and it comes out of this retracement and disappeared from this neutral trend zone and go to your trend direction, if you're no longer seeing it here, it is going to do something like this. Currently now it's doing something like that's when you're seeing this arrow. Price is coming down. This is a 4 hours time frame. Price is trying to come down. Then if it comes out of this retracement, you'll now see something moving up again. Continue from where it's going to. This is the simplest way you can trade. This is the simplest way. So if I were to trade now, I would just target this GBP USD. Patiently wait for it when it's going to leave this retracement, because it's what currently buying, but now is on a retracement, which is level 2. I'll wait for this thing to get out of this place. Once this disappears, I buy immediately. You'll see I'll put my stop loss at the recent low. Immediately we'll move ahead. So the only thing you need to do here now is for you to wait for this pair to disappear out of this place, to come out of this neutral zone or this retracement, then you buy. So I've shown you now 3. First thing first, place a trade when you see a first phase, 1 candle in any trend. When you see a phase in first phase, 1 candle to 3 candle, numbers of pips must be 1 to 40. Anything more than that, you're using a sniper entry to enter into that market. But for this, the second one is to use turning points. Once you spot a turning point on the last phase, you enter immediately. You understand? I've talked about that too. The next one is neutral trend, which is what we're discussing right now. Neutral trend, your job here is to what? Look for pairs that are you don't look for the pairs. Immediately you click that filter, it will select all the pairs that are in neutral, which are in retracement in summary. Then you wait for them to leave this zone. Once you no longer see GBP USD on this place, that means it has gotten out of this neutral trend. It has turned to a bullish move. It will continue its bullish move upstairs. But you don't do anything when price is on a neutral trend. You understand? You don't do anything when price is on a neutral trend. You understand? So that is how you take advantage of the forex market with Bekenet Trading Journal. So don't allow this retracement to bother you. It's just giving you detailed information of how deep the retracement is going. Simple and straightforward. What's your concern here is for this pair now, Euro USD, to leave this zone, to leave it and go to the trend direction. Let's say if you can spot it on the trend direction, you will not see it there. It's not there because it has gone to a neutral state. You are not going to find GBP USD or Euro USD on your trend direction. As you can see, we don't have it here because they are no longer here. They've disappeared going into their trend direction. So every other pair that you're seeing here, they are moving along the normal trend. If you don't see it here, that means it's having a retracement in the neutral trend. So you go to the software, give you details, break down everything for you. These ones are moving accordingly the way the market is supposed to move. Immediately there's a slight retracement on these, you go to the neutral trend and see them and wait for them to come out of that phase, then before you start buying or selling. Simple and straightforward. That is how you spot what the neutral trend or a retracement. So like I said, this retracement is just a detailed information of how deep the retracement is going to be. If it's going to be very deep, it's going to break a certain low or high so that this one will turn to a last phase. We don't do anything on last phase. Once it turns to a last phase, that means you have to wait until it turns to a first phase. Or if you spot a turning point on it, then you take advantage of it. It is pretty simple. Patience is the key. Pretty simple. The same thing with synthetic and every other pair that we're going to add to this. That is how you spot them out. Pretty simple. I've covered it. Now, on this neutral trend, once price has entered into a neutral trend, the candle does not matter, the numbers of pip does not matter, because it does not matter because price has gone up. Now it has come back a little bit again to form something like this, an M pattern. If it's going up, it's going to form an M pattern. So your stop loss will either be here or here, where it turned that V. You start buying again to the upside. The same thing if it's selling like this, coming down. Okay, this is selling, coming down, and it move again. You see something like M pattern coming down again. So you can put your stop loss here and here, any of them. So as long as the recent high, that is what a retracement is. It has gone out of retracement, couldn't go up again. So you just have to be patient. If you are patient enough, you are going to make good money. If you are patient enough. And another thing, focus on your risk management. Don't place all your lots, 80% of your account, on a particular trade, because by the time you're going to encounter a drawdown or a retracement, your account may not be able to hold the trade. Then you blow up your account. At the end of the day, the market will still move alongside it is. If you're using $20, $10, you can grow it. See, use the lowest lot size. Stack only one. Most especially the synthetic guys, they love putting like three stacks and all that, which is very bad. If you don't have up to $10,000, $20,000 in your account, put only one position, just one position. You can only open another position if you are already in a profit. You know that that profit can cover for your loss. You understand? When you're breaking even. Simple as that. If you do this thing, you are going to excel. You're going to excel. This is what I use in trading. I use key level. I use this. I use trend direction. I use everything that I'm showing you here. So you're supposed to make money. This is the simplest application you can find anywhere in the world to smash the market. As I'm telling you, that is how it is. So we are done with the trend direction. We are done with the turning point. We are done with the neutral trend, which is aka the retracement. Simple and short. So whenever price is in retracement, we don't do anything. We don't want to do anything. Let's say, for instance, if I start buying immediately, as I'm buying immediately, it now enter into a retracement or a neutral. Say there are two things. If I look at the pair, I look at the volume that is calculating and all that, I can decide to close and wait for it to come out, or I can risk my stop loss for it. If it hits my stop loss, fine, because it's trying to retrace back. If you hit my stop loss, but some persons can close depending on how you want to do it until it comes out of this retracement. That means you're free to do whatever you want to do. That means you're very free. Then you can take advantage of what? That retracement. You understand? Then you can take advantage of what? That retracement and start buying or selling. So that's that. So the next thing now we're going to talk about is the sniper entry, which is very simple. You only use sniper entry when price has gone far in the trend direction. Let's go to a trend direction. When price has gone far in the trend direction, let's go to trend direction. When price has gone far, let's say this one is this gold now that is on a bullish move, 80 pips already. Now I still want to buy it and I know that the trend is still strong. All I need to do is just go to my my sniper entry. Go to my sniper entry. I've given you first trend direction, two turning point, neutral trend. So we have three strategies that you can use to smash the market. There's no excuse for you. Three strategies that you can use to smash the market. The fourth one now is the sniper entry. You only use sniper entry when price has gone far, gone very far. Then you now scale down to what? 30 minutes or 15 minutes to enter into that market. How do you do that? we are using gold as an example. Look at it. We're using gold as an example. Gold in the trend direction. Gold as an example. We missed out the trend. It's already 80 something, 85 pips already, which is this 85 pips. But I want to buy. All I need to do is go to my sniper entry. Go to my sniper entry. Where is my sniper entry? I'll click on this sniper entry. All I need to do now is to look for any of the time frame. Basically, I might use what? 30 or 15 minutes. If I get my trend direction in maybe daily time frame, then I can use my 1 hour. But since it's in an hour, which is 4 hours, I can use maybe 30 or 15 minutes. All I need to do now is to spot a pair that is alongside, that aligned with what the 4 hours is doing. Now look at it now. In our 4 hours, we saw it on first phase bullish move. First wait for bullish move, but on our 30-minute sniper entry, it's telling us what? Last phase. Like I told you, we don't have any business to do with last phase. We don't need to do anything with business with last phase. It's telling us partial move, last phase. So for me now to use sniper entry to buy that 4 hours bullish move, I'll wait for this now to turn to first phase, one candle, first phase of a bullish move. Now it's already in the last phase. I've missed out already, so I need to wait to use this sniper entry to wait for it when it's in first phase. Once it turns to first phase, I'll start buying, because that pair is on the first phase. The same thing. So how do you get it now? You see what? You can click the rules. It will give you the rules of sniper entry. You say if the past candle is above 2, follow this rule. Only enter if the pips is in negative or less than 20 pips. Alongside, and the trend direction must be the same with the 4 hours time frame. Like what I just told you, must be bullish move first phase. Sniper entry must be bullish move first phase. Nothing more, nothing less. And the candle must be between 1 and 2. Anything above that, you have to wait again until it turn to a first phase before what? You take that direction. Be it bearish move, or if the gold is in bearish move first phase, you come to your sniper entry, you wait for it to be first phase, must align first phase what? Bearish move. That is how what? You take advantage of it. It is pretty simple. Like this one now that is showing us 2 candle first phase. If I want to buy this market, I must make sure that 4 hours or 1 hour is in what? A first phase of a bullish move before I can sell this pair. Because I'm going to be using a sniper entry to enter into the market, I must make sure that both pairs, GBP is in what? GBP card is in what? First phase of a bearish move, and I'm seeing the first phase here, so I'll just start selling immediately. But if it's not, I will not have anything to do with sniper entry at all. You understand? I won't have anything to do with sniper. And sniper entry, you can incorporate it into your own trading style, because on this time frame, it's telling you that on 15 minutes the market want to start buying, on 30 minutes you want to start buying at that particular time. So you buy alongside. It's like a partial retracement, but it's not well detailed. You understand? The well detailed one is the main time frame that is showing its own retracement, but this one now, you're using a lower time frame to come and buy when it is low at that particular time frame. Then you do that. So you only what? Buy or sell when the first phase correspond with the higher time frame first phase. That is all. This is pretty simple. That is what you need to watch out for. Anything last phase, we don't do anything last phase. Anything last, you will not see last phase turning point on 15 minutes or 30 minutes. It's only made for 1 hour, 4 hours, and daily. You understand? So that's the only way you can spot all those things. So that is how you use your sniper entry. It's pretty simple. Once your higher time frame is in the bullish move first phase, you scale down bullish move first phase, and the numbers of pips is more than 50, it has gone far. Then you go back to your 15 minutes, 30 minutes sniper entry, wait for it to be in the first phase of that trend direction, one candle, then you snipe. You see that you just be buying straightforward, selling what? Straightforward. So that is that on how to use Bekenet trading journal. Like I told you, this video is going to be long. It's over one hour now that I've been talking. So this is everything you need what to trade the forex market with this Bekenet Trading Journal. Every other thing is to just automate it and make you work smarter. Now, all this method I've shown you, you can actually use your computer to do it with the URL. You can use your iPhone to do it. The only difference is that when we attach those notifications, you will not get it. But manually, you can get those information. The only thing that you're going to sit down and watch it. But if you're using an Android phone, you can easily program it to give you notification alert when we start those notification on trend direction, turning points alert, and all those stuff. We're going to incorporate it into the system. You'll just be doing anything in a very smart way. You understand? So this is everything you need to know about, be it synthetic, be it what forex, the same pattern like I showed you. That is how you use it to do it. Now let me just scan through this synthetic pattern. There's one thing I did not mention again, the charts. Let's say for instance, as you're trading, always plot your charts. Always plot your chart. How do you plot your chart? You just come here. That is very simple. This chart will guide you to help you a lot to see where price is reacting to certain key levels and all that. So first thing first, all you need to do is you select your pair, select the time frame, then you click load. So let's do it. I'll select GBP USD time frame, 4 hours. I load. It will now load me the candle. This is the current candle before the market close. You understand? It will now load me the current candle. Now I want to see the key levels that where the price is reacting to. I just click setting. You see, I click setting. I'll click it. It will now give me what? This is plain to remove key level. This is monthly key level, weekly key level, daily key level, reversal level, range, and trend. We've not activated this yet. This is to remove key levels. You understand? So now let's add it. Let me add what? Weekly key level to it. So immediately I click on weekly key level, you see it's going to shrink it. Now I want to reduce it, so I need to take out what? This one is S3, this one is S2, this one is arrow 1, this one is arrow 2. So I want to leave only pivot and what? Arrow 2. How do I know that this is this? Once you tap it, it will what? Give you the name. You can see support 3, this is support 2, this is resistance 3, this is resistance 2, this is pivot. So I want to take out resistance 3. All I need to just click on remove. I'll look for arrow 3, remove arrow 3. Immediately I click it, you see it's no longer there. I want to take out support 3. I'll click remove arrow 3, remove S3. As you can see, it's no longer there. As you can see, the more I removed it, then it will open the chart for me. So you can just put what daily. Let's say for instance you're trading. So once price get to any of these key levels, if you know how to trade key level, you can take advantage of it. But you can still use it as your take profit. Once price touch them, you just exit the market. So you always use your can close this to get a proper zoom. You can always use your key levels to exit or enter. You understand? Once price get to them, they always react to it. You understand? Then you can take it as take profit and all that. So that is how you use the chart to do anything. Then you can click home and go back to the main menu. So I wanted to dive into the synthetic a little bit. Now the synthetic, the same way you can generate your key level. If you know how to trade key level, you generate, plot it. But if you don't know how to trade key level, please avoid it. Avoid it. I beg you in the name of God. Avoid key levels. It's not for newbies. You understand? Upgrade yourself with resistance and support, like what I said in the first phase I was about starting the video. Upgrade yourself first before you do anything. Then that's that for that. You generate and do the same thing. You can see set alert on it. You understand? The same way we set on forex. Just select the same thing. I can set notification alert. So once price get to all this level, I will get a notification. Simple and straightforward. We're still going to add charts to the synthetic. You understand? Before the week runs out, you add it the same way we filtered our currency, the same way to you filter your synthetic, the same way. We only have two here, so you have to wait for all these ones to turn leave this neutral zone, then you start smashing. So the same principle followed with all. This is not a rocket science, it's pretty simple. The same principle followed with all, the same thing, trend direction, the same pattern, the same thing, the same thing, the same thing, the same thing, the same thing. Like this one now, this one is a good one. Numbers of pips is just 12. I just spotted it now. I've smashed all these ones back to back before I created this video. This is just two candles, so I can begin to sell immediately. It's just 12 pips. I can begin to sell immediately. This one is what? First phase. This one is 3 candle. I can begin to buy immediately. This one is far more than 11 keys. So I can use a sniper entry to enter into this one. It's pretty simple, straightforward. You don't need rocket science on this. You understand? Just the way I'm spotting it now. This is first phase. I can start buying immediately. Just 33 pip. I can start buying. Just like that, just like that, just like that, just like this is what? First phase. This is first phase of it. You understand? Look at the pips. I can start buying. It's just 2 candles. Put my stop loss at the low. So that is how you trade both the synthetic and the forex. Pretty simple with the trend direction. We've given you 5 ways. First, the first trend direction, turning point, neutral state, then sniper entry. So you have 4 ways of what? Smashing the market with ease without you doing anything. By using just the trend direction alone, you'll be able to smash the market back to back with 4 good strategies. So it's left for you to pick any of them and focus on it and smash the market. Don't overload your account. Don't overload. One position is okay. We have 28 pairs from Monday to Friday. If you are trading synthetic, Sunday to Sunday, you'll be able to smash the market. So if you follow all these rules, you won't have problem of blowing up your account or not and all that. The only way you can blow up your account if you are using high lot size that is bigger than your account. That is when you have issues. If you have $100, 0.02 lowest lot size is okay. If you make $2, $4, I'll create a video on that separately. But this is just a strategy that I'm talking about. This is what you need to make money in the market. Simple. Once you watch this, you can what? Make money. Except you are not a forex trader, you don't have experience. That is when you'll be having difficulties with these videos. But if you know how to place buy and sell in your MT5, where to put your take profit, where to put your stop loss, you'll be able what? To take advantage of this application. Simple and straightforward. So I'm going to stop here. I've been talking for about 1 hour plus now, so I'm tired. I'm going to stop here. This has covered everything that I was supposed to be teaching every day by 8 o'clock. So our what is it called? Our Zoom meeting is going to be on a very fixed day. I can just pick a day in a week and fix it. Then you come with your question and I'll answer it. But this video has solved everything that I need to tell you. Everything that I need to tell you. That is all for now. So just watch it. You can see send me a DM if you're having issues with it. Send me a DM if you're having issues with any of the courses, then we'll be able to sort it out for you. So that is that for now. So you have a blissful weeks. I'm coming to smash the market back to back. I'm not ready to trade yet, but I'm coming. I'm still going to drop signals on the group channel and all that, free, and everybody free. Both the VIP I'm still going to drop for you guys. I'm coming. Let me just rest a little bit, then I'll come. I'll drop the video and everybody watch it and understand it. There's no way you watch this and you are still losing. If you're still losing, that means forex is not your thing. Patience matters a lot. What was it called? Patient and proper risk management. If you observe all these things, you're definitely going to smash for this month end. You're definitely going to smash. That is the bottom line of it. So see you guys with your questions and all that. Thank you for your time.